Hi everybody, Sil here for a very special market update for this third week of December 2012. A few things we want to cover. We want to recap a few things that Steve had mentioned in last week's market update, and then look at maybe a couple other markets of interest as this market is showing a little bit more bullishness in the last couple of days. So I want to first start off on the S&P, and this is a weekly chart. And the main thing I wanted to show here was just essentially the direction. Long term, for the last couple of years, the market, of course, has been going to the upside, and you see the higher highs and the higher lows would identify the long-term trend being to the upside. A few other key areas, of course, of interest on this is, of course, the support area. There was a big correction. There was a support area in and around the 200 weekly moving average. At that time, was very flat. We found support here again on a kind of a barely rising 50 weekly moving average here as well, and then again on a more rising one of late here in this last correction that we just experienced in the month of November, December. So let's go from here into the daily chart. Okay, so now that we look at the daily chart, a couple things of perspective. First thing to look at is the resistance that was established across the top through here with a shooting star, an evening star formation, and then followed up by a dark cloud cover, which eventually led to a decline and a correction of sorts until we finally bottomed out at that 1350 level on this S&P daily chart that we see here before us. Okay, so from that 1350, we had a rebound and we had a somewhat of a correction, short squeeze back to the upside. And I think the things to note, of course, were the retracement levels. One was, of course, an area I think was of importance, was a level of resistance that was being established across this pivot area right here. You got some lows across here that were essentially creating some highs and resistance, which carried on through into this area, which of course, as of today, on this particular market day, broke through that 1430 level and broke above that area of resistance. That same area of resistance coincided with a retracement level, which I want to share with you here as well. So we had the bottom, of course, here at the 1340, 1350 area, and the first real strong place that we found resistance was the support area right around the resistance and support area right around 1410. So we came into this area here and found a little bit of resistance, and that's where the biggest retracement level occurred. So the first thing to point out at these levels is the fact that down here you've got your support, you come back up into resistance, you retrace, and you end up hitting the 618 retracement level, which also coincided with the 200 moving average, and then races back higher again. Now you're seeing once you cross the 100% retracement level, your next likely point of reference would be the 1272 extension, which is where it also found resistance, which, as I showed you earlier, 1430 coincided with the levels of support that were established in the past. And then, of course, today it's breaking free, as I pointed out. So now, as the market's breaking the 1272, there's a percentage opportunity or probability that the market now will get into the 1618 level of resistance. So there's some expectation that we could see some resistance right there. So we're very close to that level. The more obvious level would be 1470 naturally, because of where the other prior candle formations and resistance levels were established. But from the standpoint of Fibonacci's, I would watch this level closely to see if there's any kind of hiccups, any kind of pause, any kind of profit taking. Which, if you're long this market, you might consider doing the same if we're seeing it on the screen as well, in terms of candle formations, and otherwise looking into the next level, 1470, thereafter, that this level of about 1455 level is met. Okay, so from here, I think we'll cover the Treasuries, the 30-year notes. Okay, so what you have before you is the Treasuries, the 30-year note Treasuries is essentially what we have. And you see that from left to right, the trend here also has been to the upside. But I think the thing to note here as well is what has it been doing lately in the last year. And what we're noting is the fact that while this was certainly rising right in through here, now you're starting to see that the highs are not getting quite as high, and now the lows in through here are in jeopardy potentially here of being broken down, and things may be going south. So consequently, the markets are in an inverse relationship with the Treasuries. As the Treasuries go down, markets go up, and vice versa. So it'll be interesting to see how that progresses here. So I think a closer look on the daily would be warranted. Okay, so now we're on the daily, and I think, of course, it warrants, I think, getting a little perspective. You can see how the Treasuries were in a slight correction at one point, hit a high, of course, and prior to that hit a low, hit another low. But that low right here that I'm pointing out, it was a 200 moving average as well as the lower trendline channel line. Came back up to the upper channel line and through here, as well. That coincided with a little bit of 50 moving average resistance and or support through here, then came all the way back down to the 200 moving average, seemingly found support, then eventually raced much higher back into a new channel, from a declining channel to a new channel which found resistance, which coincided here as well with the pivot area right across this level through here. So now that we have a little bit of a drop in the market, what was important was right in this area through here. We were coming down, treasuries were coming down, found support at the lower channel level as well as the 200 moving average, and was looking to bounce and perhaps possibly go higher as the markets were at a point of resistance, as you recall as well. But what's happened is the markets have broken through resistance, and we're also seeing, of course, the treasuries breaking through support levels and now tapping into the next level of support and pivot area with a little bit of a bounce. Notice the shadow here late in the day that occurred on this particular market day. So we'll have to see what the treasuries are going to do next. Will they actually show strength and maybe retest the breakdown, or possibly snap back in as a possible crack and snap formation? Otherwise, if it keeps going further south, you're looking at support of this next pivot area in this 144.16 level. Okay, so from here, let's take a look at the euro, since there's been so much news from across the big pond. Okay, so now once again we look at a weekly chart. You see how the weakness of the euro was quite predominant for a long time. There was a clear downtrend in through here to the downside until it finally seemingly bottomed at 120 with a bullish engulfing formation and an extremely oversold situation, and then eventually rebounded back into the declining 50-week moving average, as well as a 130 level that was a little bit of resistance based on some prior support that was established, as you see right in through here, and then seemingly added a little bit of resistance in through this level as well. Particularly now what we're seeing is the euro and the US dollar pairing here has consolidated. So we saw a bottom formation through here. Pardon me for that. That's the wrong thing I wanted there. We see a bottoming formation through here. We have a rise, and we see essentially a consolidation formation that's developed here, kind of a box formation at the 50 moving average, and coincidentally with the 130 round number level as well. So now that that's established, let's take a closer look on the daily, and we're going to see a little bit more detail involved there. Okay, so now with the daily on your screen, you can see what I was showing you earlier on the weekly, the box formation that was there, and except for just that small area where the euro dipped outside and tested the waters outside of the box formation, this has pretty much been going sideways, as you can see from this formation. And as you focus your attention on the right edge of your screen, you're seeing for the last couple of days now the euro breaking out and above this resistance area that was formed with an evening star formation, a dark cloud cover, another dark cloud cover over the last several months. So for the first time, this is peeking through the upper portion of this resistance level. So the one thing just maybe cautionary is in the event that this could then be a falling off the roof, it could reverse, go lower, which becomes an immediate short position. But otherwise, there's some strength in this particular market, certainly, if this can truly be confirmed to the upside. You have a potential measured move then to the upside based on the width vertically of this particular box formation that you see here. So euro looking pretty strong despite the fact that there's seemingly a lot of trouble still in Europe. Okay, then lastly, let's take a look at oil and crude in particular here. So we have a weekly chart once again. You see clear support just above 75 and just below 80, right in that vicinity of about 79, 78 area, where there's some clear support on a couple of occasions. But the highs in this case are still declining. So this is starting to wedge and getting a little tighter below 105, but certainly above 80 as well. So any clear direction, well, obviously this is going more sideways, with ultimately the highs going lower and lower, where there seems to be volatility being a little bit more compressed than ever before. So the highs are coming down, the lows are seemingly remaining the same. But look at the last action for the last couple of months. In those last 5, 6, 7, 8 candles, we're seeing very little activity. It's pretty much sideways. So I think a closer look on the daily would be warranted here as well. So now on the daily, we can see the sideways action that's occurred through the month of November and now through parts of December as well. And so I wouldn't call it a box formation, but certainly there appears to be a support area that was established here and here with a bullish engulfing and a bullish piercing in prior candle formations. That in itself has then created a form of resistance. It's a little sloppy in through here, but between that, trend lines that are on the downside through here, as well as even moving averages, there seems to be a resistance here between, we'll call it 88 and as high as maybe 90. There's a range of resistance in this area right now that's hovering above. That's been a little bit of a havoc for this particular market. Now support levels are pretty clear. It's a little sloppy down below here as well, but essentially as low as 84 and then more so into the 85 area as well. So a little bit of upside pressure maybe, but at the same time downside pressure as well. So this is kind of wedging not only on the long term, but also seems to be wedging at least a little bit on the short term. But for the most part, you have to call this neutral sideways action. And these are live candles, so you can actually see there's a little bit of a positive price action going on right now in this particular market. You're looking for oil ultimately to get above 90. Once it gets there, then it has a good shot to get into 93 for the simple fact that you have, again, former support and resistance and a change of polarity that occurred right into that 90 area right above. As mentioned, there's going to be a little bit of resistance in through this area at 90, of course, as well. Now, the one thing to point out here as well is the time frame and what has happened in the past compared to what's happening now with respect to the probabilities of oil going higher. So it got stuck here and fell quite dramatically based on a trend line formation, but also just pretty much a pivot area and a large area of resistance at 93. Back down here again, another trend line resistance. Here it was more of a 50 moving average, as well as here was a 50 moving average. So now for the first time we have at least one, if not a second potential closing above a 50 moving average, which we have not seen since way back over here in this particular market. So there's a chance, of course, with this kind of an impact, the couple of closing candles above a 50 moving average, that this has a better shot of not only getting to 90 but possibly breaking 90. But again, that's why we watch the candles, that's why we watch the charts, and let the charts dictate, essentially the candle formations dictate our actions with all the markets that we decide to trade. So that was interesting. Okay, so with that said, I think that would conclude this week's special market update. Look forward to joining you again for another one in future. Hope this was helpful. Have a great rest of the week.